Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. We just had a great conversation with Mr. Stephen Trang about Phoenix, but now we get to dig in and say, okay, buddy, the world's changing. What should we be doing? Agents, brokers, investors, buyers, wholesalers, flippers. He knows it all. I get to listen. How you doing, Steve?
I'm doing wonderful. Thank you.
Where would you want to start in this list? Let's just start with agents, right? You are an agent, you're a broker.
Mm-hmm. Yeah.
You obviously talk to your team, certainly weekly or daily. What are you kind of coaching them up? Because if you've been an agent for 2 years, you really have no idea what's coming, right? You haven't built that callus yet.
and you went from like, God, please give us more listings. Like, God, why are you giving us so many listings? Right? Like,
yeah, like overnight. It's like, whoa.
Yeah. So as a realtor, right now, the biggest objection from buyers is market's going to crash. Mm-hmm. Or like, I'm going to wait this one out. Right. Or I think interest rates are going to go lower.
Yeah, I hear that too.
Right. So those are the objections we're going to hear. And I think the big thing here is to speak to the buyer's concerns. So, I mean, I think the first one, as far as interest rates going lower, that's a really simple objection, right? All right. So, Michael, your concern is interest rates are going to go lower. Yeah. Mm-hmm. Okay. So then would you rather lock in your interest rate now and protect yourself against interest rates going up? Mm-hmm. But if it goes down, have the option to refinance at a lower rate.
Okay. I like that.
Right. I mean, why wouldn't you want that option? Right. So I think that's the first thing. The second thing about waiting for the market to crash. Mm-hmm. So I think that is, unfortunately, is going to be a conversation about data. And I hate negotiating or debating with data. Mm-hmm. But really, data is for today on your side.
Yeah.
Right. So I would ask him, like, Michael, I'm curious, what has you thinking that the market's going to crash? And you're going to hear like this and that. And so I was like, okay, so, right now we're dealing with the most inflation, the highest inflation we've had in 40 years. Mm-hmm. And they said, yes. Okay. So, do you know what people generally buy in inflationary markets? And they're like, they might tell you yes or no, right? Like, they might say, like, people buy gold and silver. Yeah, they buy assets. They mm-hmm. buy things that appreciate, mm-hmm. right? To protect themselves against the dollar. Mm-hmm. Well, I'm not sure if you knew this or not, but one of the things that always appreciates during an inflationary period is real estate. Mm-hmm. And if you're not convinced, I'm happy to show you the data mm-hmm. that real estate appreciates in an inflationary market, which mm-hmm. is true. We can pull out that data that shows inflation, real estate goes up. So, so we can give them that data, right? If that mm-hmm. is their concern, if they're waiting for the market to crash. Now, for a market to crash, we're going to need a major recession. I'm not saying like this recession we're about to hit or are hitting right now. I'm talking like 2007, 2008 recession, right? For a lot of people to lose their jobs. I'm not sure we're going to get to that bad. Could we? Absolutely. But I mean, their perspective, if they're buying a house today, is they grew up mm-hmm. in 2007, 2008 and watched mom and dad lose their jobs and lose their house. Mm-hmm. That is not normal.
No.
Right?
Yeah.
So we just got to, again, educate them like, hey, like, what is your concern? Mm-hmm. What are you seeing right now? Like jobless, like the unemployment rate is still at 3% and change or something like that.
Mm-hmm.
3.6. So like, until people start losing jobs mm-hmm. and can't pay their mortgages, we're not going to have this crash, right? And mm-hmm. the other thing too is literally every person Michael, that's bought a house for a year or more has at least 30% equity.
It's pretty crazy, yeah.
Right? Mm-hmm. Who's getting foreclosed on right now? No one's getting foreclosed on right now. If I had to sell, I would just put a sign in the yard.
Mm-hmm. Yep.
So like, I think these concerns about this market crash is because people are getting false data mm-hmm. or they're making data decisions based off what they're hearing from other people or feelings or so on. But the facts just don't support
mm-hmm. No, I agree.
A major crash.
No, it's funny. I talk real estate every day on my channel, and that is probably one out of every fourth comment is the world's going to end and real estate's going to zero. And what I've come to believe, and I just want to test your theory on this, I think we are going to have the largest crash in 50 years, but it's going to be a crash in transactions. Mm-hmm. I believe real estate transactions are going to crash 20 to 30% this year and 50% peak to trough. Like it's never happened.
I don't disagree with you in that assessment. I don't disagree with you that transaction count is going to go down. Realtors going to be hurting. Title companies going to be hurting. Mortgage officers, loan officers are going to be hurting, right?
Yeah, absolutely.
But at the end of the day, as long as people are buying, as long as people have need a place to live, real estate.
No,
will be
real
fine.
estate's going to be, again, if you're an owner, you're going to be fine. Because again, I can confidently say transactions are going to crash. I deem anything over 20% a crash. I think there's no question that it crashes this year and continues next year. But in the end, the Fed broke the housing market. The housing market for 50 years was rather consistent. You buy your entry-level home, you live in it for 5 to 8 years, you have 1 or 2 kids, you have 2 or 3 promotions, and then you sell that home and you move up. They broke the goddamn market. We now have people in the housing market with interest rates with a 2 on it, fixed for 30 years. Those people aren't moving. I have a joke on my channel that basically says, if I was one of those people and I had another kid, I would buy bunk beds. They're going to stay in that room together, because I'm not going to sell my 300 home, buy a 500 home, go from 2.5 to 6.5. I'm not doubling my mortgage payment. I don't care if there's one more bedroom. It's not happening.
Yeah, we're going to have to make it work. So I got again, being a realtor in 2007, right?
Yeah.
Not the best time. So I got a loan mod on my house, right?
Uh-huh.
And my loan mod, with HAMP, I got my mortgage rate down to 2%. When my mortgage rate went down to 2%, people are like, when are you going to move? Like, never. Right? Like, I didn't move until I had my 3rd child, right? Like, that was a house I bought as a single person.
Exactly.
It wasn't until I had my 3rd child. I was like, okay, like, we can't do this anymore.
We're going to put him on the couch. I mean, where does he go?
Yeah. Like, it has to be really circumstantial, or not circumstantial, but like really unbearable.
Yeah, it's that 2nd or 3rd life event. Again, the Fed broke housing. Normally, you get married, the wife gets pregnant, you move. Now it's wife gets pregnant, have a kid, wife gets pregnant again, have a kid. Maybe and again, this is why it's going to be extended for years, right? The average move was 5 to 8 years. It's probably going to be 8 to 10 years now, because it's got to be 2 or 3 life events.
Well, they can fix it. I don't know if they will. They can fix it, right? But they made a conscious decision to break the market, right? They said, when Jerome Powell says, I am going to reset the housing market, he did it. He didn't, like, slow it down. It's like, guys, let's take it easy. Let's just gradually adjust. He just said, F this. Yeah. And threw a Molotov cocktail into the housing market.
Yeah. And again, we're going to see a lot. So again, I talked to 8 or 9 different millionaires every week on the channel. And one of them is a builder. And he's basically like, Michael, I can tell you what's going to happen. And it's happening, as he said. Builders are smarter this time than last time. They don't build.
I hope so.
Well, God, yeah. If they survived last time, they're smarter, right? They manage cash flow better. So again, what they're going to do is they're lot committed to the communities they're in. They're going to burn the village to get people in, do whatever they can, pay more commissions, give credits, all of that. And then they're going to slow their ass down, right? So all this talk about new home builds, at all-time highs, it's not going to be that way in 4 months, 5 months. They're going to slow down.
No, there's no reason for them to, right? Like, why would they, with the way things are set right now, knowing that people that live in a home today, that own a home today, aren't going to move. Now, who's going to be buying? First-time home buyers, right? People that graduate college, people are moving here, right? But beyond that, it doesn't make financial sense to move up unless you have really extenuating circumstances.
Exactly. The move-up buyer is dead. And again, the reason this is a problem, and why I think median price goes up, which really drives my audience crazy. So I'm call it a 40% crash in transactions, and median price goes up, and it drives people bananas. It's because we lost the low end, right? When you draw out median, it's a list. It's just an order from the cheapest house to the most expensive, and the median is the middle. If you go to the lower side and you whack 30%, guess where the median goes, Steve? It goes up. And people just lose their mind. They're like, how could prices go up? How could the median home price go up? I'm like, well, it's just math.
And inflation.
Yeah. And inflation. Yeah. Yeah. So this is very interesting. So the other thing I would tell agents today, kind of take the other side. You really went after the buying side. I would actually tell agents that list homes, you better watch out. You're going to have a lot of time wasters, right? What I would really tell agents today is you got to figure out, do they need to sell, or do they want to sell,
Mhm.
because a lot of listings are going to come out at what I call wish pricing, and wish pricing left the building. So if I
Oh
was
yeah.
an agent and I had a bunch of wish price listings, I wouldn't take, I like 2 years ago, you took all the listings you could.
Oh
I
yeah.
wouldn't take those listings today.
Oh yeah. 2 years ago, 50,000 over market, no big deal. Let's do it. Let's do
go.
this, right?
Let's
If
let's
it's
do
wrong
this
today,
thing.
it'll be right in 3 months,
Exactly.
right?
Yeah.
But yeah, we had a policy back when I was really active. We had a policy we never took overpriced listings, right?
Yeah.
That tune changed when things went crazy.
Yeah. But I'm going to guess you're going to institute it or have already going forward, because the market's just different.
Oh yeah, and I took a listing last week, right? And I don't do a lot of listings. This is a referral from like the kids piano teacher, right?
Yeah.
And we took the listing and we literally, right, we priced it right, and we have 2 offers at or over asking price, right? Because it's priced right.
Yeah. Yeah, that's the key. And again, a lot of people are talking about markets. In Phoenix, like 6 months ago, Steve, you would have had 20 offers on that house.
For sure. Over asking.
Yeah.
Waiving appraisal. Yeah.
Today, 2. Guess what? You only need 1.
Yeah.
Right. So
exactly.
Pretty cool. So if we flip from agents to maybe wholesalers, I'm really nervous. Wholesaling became hot. It became the YouTube thing for a while.
Mhm.
A lot of them been in the game last 2 years. Again, like agents, it's probably the best 2 years to get into the business. I think the next 2 years, not so much. What's kind of your advice to a wholesaler who probably is feeling themselves a little cocky, arrogant about what's coming up in that market?
Well, I mean, if they're cocky, well, they're about to get humbled, and I've gotten humbled by countless times. I watched a TikTok video last night, where Elon Musk their interview was like, why is full self-driving not working yet? Like, you've promised this over and over again. He's like, well, we had a lot of false dawns, right? Meaning like they thought like, oh, if we can get this is going to be good. And then that's a ceiling. And then now they got to struggle to move up. Okay, once we get this, we're going to be done, right? And my comparison here is like, I want to say like 15 times in my career is like, I finally figured it out, only to become humbled, right?
Yeah.
So if they're feeling really good about themselves right now, they're about to be in a world of hurt. So I believe we're going to lose half the wholesalers in the next 2 to 3 months.
I agree. I've said that too.
Yeah. So I think that as a wholesaler, you're going to have to have your head on the swivel. You have to be nimble, and you have to adjust and modify. Things that we're going to start instituting, more creative options, novations, and I think that's on I think acquisitions, truthfully, I believe is going to get easier. And not today.
No.
It's still hard today because sellers are still kind of looking back in the last 6 months.
Mhm.
But I believe in 2 months, it's going to get a lot easier.
Yeah.
But dispositions got harder overnight. It's a lot harder to dispose of property today.
Yes.
We have our flippers saying that we need to buy it at 65%, right? To which I haven't said it to them in my head. Well, you can go F yourself.
Yeah. Yeah. I could do it at that number myself.
Yeah. Like, I'm just going to close it on myself. So I talked to the team leader this morning. It's like, hey, by the way, all those buyers that said they need to buy at 65%, just remove them. Don't call them anymore. We're just going to start taking down our own deals. Like,
exactly.
I understand that they have to price their risk, right? They have to build it in. I appreciate that, right?
Yeah.
But I am not going to completely modify my business to satisfy people that are concerned, right? If you are unable to handle what's going on in this market, fine.
Yeah.
I can, right?
Yeah.
There is nothing at this moment that's indicating the market prices are going to drop. Is it going to get harder? Absolutely. But are we seeing a 10% price drop in the future? I don't see it.
No.
And I have the good fortune to be friends with the person that owns the second largest title company in Arizona, the number 1 female loan officer in the country, and the person that provides all the data for the Crawford report that I get to read off of. I get to talk to all 3 of them, right?
Nice.
I have my hand on the pulse. So because I know that there's nothing today, right? Things can change in 30 days. You're talking about the report from NAR, right? That could scare a lot of people. But as of right now, there's nothing to indicate a housing crash. As long as we're not going to have a housing crash, I can buy at 70% and I'll make the 15% profit, right? Why would I try to sell you a deal at a stupid low margin? Now, I have that luxury because I have a history. I got to lose everything in 2007.
Yeah.
Right. But if you're a brand new wholesaler, if you haven't had access to private capital now, it's gonna be really hard to get it today.
No, I agree with all of that. The one thing I'm telling folks, again, I have a lot of flippers and wholesalers kind of in my network. The biggest thing I'm telling flippers specifically, they need to wake up on is their hold time. Again, I think
Oh yeah,
a lot of
100%.
yeah, a lot of people got spoiled with, from list to closing sub 30 days.
Yeah.
I'm
Yeah,
like,
I think we got to see this with COVID, right? Like momentarily, like for a blip, like 3 weeks. But we saw this with COVID was that everyone had to modify, price in the hold time.
yeah,
right.
exactly.
So for a lot of flippers, 12% I think is probably pretty common as far as hard money.
Yeah.
Right.
Yeah. Yeah.
I mean between 8 and 18. Right.
Yeah,
So
whatever,
let's just
yeah.
call it 12.
That's called 12.
But that's 1% per
a
month.
Exactly.
Right. So if they went from a 30-day hold time to a 60-day hold or to a 6-month hold time, that's an extra 5% they need to price in. So I understand that they need to buy it lower, but I'm not gonna lose out on business because of your business model. I'll just flip it myself.
No. And again, you're in a lucky position to be able to do that. But again, there's a lot of people that this is their first chance to be humbled. And I'm just trying to raise warning flags. Hold times, please plan for, because that's profit, right? If you hold it 2 extra months, that's 2 months of payments. The other thing I think is going to be very interesting, and again, maybe this is for agents and flippers, is I actually think VA and FHA buyers are going to come back with full force. And as somebody who's sold to those buyers before, let's just say their repair lists are a little annoying at closing. So I would budget that in, whatever it is, $4 or $5 grand in possible repair items.
Plus closing costs are coming back.
Exactly. Plus pay.
Right. So you got to price in a 3% closing costs.
I would actually get ahead of it. I would put it right in my listing.
Yeah.
Right. Because again, if you do the math, right, keep the price point, but offer the 3% closing cost. Dude, offer them to buy down their rate. Right. You got to stand out today if you have a listing, right? Those are the things you got to be creative for. I guess the last thing to talk about, I know where I stand. This will be interesting for you. Since we've survived the last crash and been humbled a couple of times, are you ecstatic and excited by what's coming? Because you've been there?
Enthusiasm.
Exactly. It's hard to tell. You look kind of bored.
I know. I can't show my enthusiasm, but I was talking to my wife about this. Like, how exciting is it, right? Like, we got our asses whooped.
Yes.
In 2007.
Yeah.
But I got to work, right? I got to work with the wealthy people that came down from Utah, from Toronto, from Vancouver, from New York, not from China, because I didn't speak Mandarin. I was basically treated like a second-class citizen. That was unfortunate. But I got to see how what real money looks like.
Yeah.
At some point, we started working with Blackstone, not directly, but indirectly, right? Like I was. You were
a funnel.
All right. I sent all my deals to Blackstone, right? Just like right now, people send deals to Amherst, which I think that's taken a pause. But back then, if I had a listing, my first call was to Blackstone, right?
Exactly.
So I got to cut my teeth in that market, and I am ecstatic about this opportunity.
Yeah, there's an event I'm speaking at on the 11th and 12th in SoCal, and they've asked me to do kind of a real estate state of the union. And basically my premise is the last 2 years it's been about making income. The next 2 years is about building wealth. I'm ecstatic for what's coming. I have a stack of cash that I've created on purpose. I told my channel about it 9 months ago, on purpose for what's coming. Creativity, seller financing, all these things that we've been waiting for. What is investors? Yeah, I couldn't use, right? What is a real estate investor been begging for? At least me, a slower market. I want to find a motivated seller. Motivated sellers did not exist for 2 years.
Well, they didn't need us.
No, they didn't. No. Put a sign in the yard and you got 35 offers. I mean, it's crazy. But again,
we provide value.
You provide value, and our value grows as time goes along, because we still the human condition. People still remember their neighbor sold for whatever. They're still locked into that. You wait for the NAR report. You wait for, August to go by. Like Thanksgiving to Christmas, Thanksgiving to New Year's. It's going to be awesome, right? Who needs to sell this year? Because I can close. We're going to find out who needs to do it. So I'm ecstatic. It's going to be fun. Steve, where can people find you?
The best way to get a hold of me is on Instagram at steve.trang, steve.trang, or go to my website, stevetrang.com.
Awesome, buddy. Thank you very much.